Hi, I'm Patrick Ritchie, and in today's webinar, we're going to talk about how a $25 missed credit card payment cost a buyer $2,500 of earnest deposit money. So a happy buyer was ready to look for a house after being approved. Now, it was not a simple process to get this individual approved because there had been late payments and lots of credit issues, things that had to be rectified, things that had to be cleaned up, and they had to get back on track. And we achieved that. And everything worked out so that they could actually get approved and go out there and get a house. Now, reviewing the do not do list, telling them, don't quit your job, make sure you pay things on time, don't co-sign, don't get new credit, all of these things. Like, don't change whatever you're approved at with all the documentation. Don't do anything different. So even in reviewing that with people, they don't always remember. They don't always think about it. Like, even when you say, don't go get a bunch of cash and then deposit that into your bank account, that's potentially going to cause a problem. But then they do it anyway. It happens all the time. Even when somebody's told multiple times not to do something, sometimes they still do it. Or it's just forgetfulness. So they found a house. And now this was an interesting transaction from the standpoint that the original realtor involved all of a sudden was no longer involved. And then a new realtor was involved. And so all of a sudden that realtor comes out of the blue and calls the lender and says, hey, so-and-so found a house. Can we get a pre-approval letter so that we can make an offer? And so they found their house. But what that realtor wanted to do was to write the earnest money hard, which eliminated and removed all loan contingencies that were contained in that contract. And so even though the contract would have given them their earnest money back if they couldn't get the mortgage under certain circumstances, by writing it hard and waiving all the loan contingencies, that buyer was now locked into basically close once you get past the inspection period, or you lose your $2,500. So that was the situation that they were in. Now, the lender told the agent that that was a bad idea, but the agent didn't think that it was at the time, and that's the way they wrote it. And of course, the buyers agreed to it. So a updated credit report shows that there's 30 days late payment on a department store credit card. So now we're in a situation where during the transaction, there is a late payment that reports that actually had been from the previous month and just hadn't shown up yet. This 30-day late shows up on the credit report and takes our credit score from 670 down to 585. So does that make a big difference? It does. Now, could somebody still get approved at a 585? It is possible, yes. But with a recent late payment like that, it makes it less likely that they would get an automated underwriting approval. So I'm not going to say that they would not be approved in every situation, but in this situation now they were no longer approved. But there was also a history of a lot of things that they had done wrong, just basically showing irresponsibility when it came to repaying debts. And in this situation, not paying a $25 payment about a month before you're going to try to get a mortgage is just really a bad idea. And so unfortunately, this is what happened. And they had the money. It wasn't like he didn't have the $25. He had that in his bank. In fact, he had way more than that in his bank account. It was just an oversight. So now we've dropped down to 585. He's no longer approved. And so now he doesn't qualify any longer, and we're done. Now, there was a solution to rectify this. And so even though he doesn't qualify now, based on that late payment, that 30 days, because remember this, you are only reported late on the credit reports by the creditors to the credit bureaus if you've actually reached 30 days delinquency. You can be 1 day late, 15 days late, 20 days late. It's not until you reach 30 days late that it actually shows up on the credit report. But even though there was a way to fix the issue, which the simple thing to do is to call the creditor and see if they will remove it. And it was a department store card. That's where you have the best luck doing it. Auto loans typically won't do it. Sometimes it can get messier. Like they'll say, well, you have to dispute it. And disputing it causes other issues. It doesn't get removed anyway oftentimes. So it doesn't hurt to ask. But even though there was a way to fix the issue, it's going to take a little extra time. That's the issue that he ran into, was there is the potential to get this rectified, but they're going to need a little extra time. But the seller says no, and they won't extend it. And they are fine with just keeping the $2,500 earnest money and putting the house back on the market because they had a backup offer. So they refused to extend anything and just let it expire. The contract expired, and they got to keep the $2,500 earnest money. So what is the lesson here? Well, there's a lot of lessons in that whole transaction, but what it really teaches us is that every detail matters. When somebody thinks, oh, well, this $25 minimum payment isn't that big of a deal, it's just as big of a deal as a $2,500 payment, because you can see that somebody losing a $2,500 earnest money deposit, that hurts. I mean, you're talking, oh, that's a lot of money. It's 100 times more than 100 times the amount that they just had to pay to just keep their approval the way it was and avoid that 30-day late. So the details are really what matter in a mortgage transaction. The little things, consistency, doing what is supposed to be done. And you really got to think it through about whether or not it's a good idea to do an earnest money, making it hard and waiving those contingencies. I'm not so sure that is a good idea. I can see why somebody might do it to make their offer better than their competitor's offer. I can see it from that standpoint. But this was what I would call, well, the first-time home buyers, unsophisticated. This was not their realm, no expertise in this. So I think in this situation, I think that their real estate agent really did them a disservice. And especially when they were told, hey, this is probably not a good idea because they've had so many bumps in the road. But he did it anyway. And in the end, it cost them $2,500. So the lesson is details matter. People need to understand why, how, what they need to do, why they need to do it, how they should do it, and always feel like the door is open to ask questions. So I hope you found this interesting, and I hope this never happens to you. Be careful writing those earnest deposits as being hard, because once you waive contingencies, that certainly can become an issue. So I'll see you in the next webinar. Thanks for joining us.